Karvy case winds through the courts, big questions have now emerged on the extent of alleged misuse of investors' demat accounts and whether other firms were indulging in similar behavior. For those of you who haven't followed the story so far, Karvy Stockbroking Limited, one of the biggest firms in India, was barred from taking on new clients when investigations by NSE revealed that they pledged shares worth over 1,000 crore rupees lying in their client accounts with their lenders and then transferred that money to their realty business. So Karvy can now not take on new clients. 90% of the securities have been transferred back as per a SEBI order, but the lenders who the shares were pledged with have now gotten into the picture and want to freeze on those securities. So what about those investors whose trust has been violated? And how do we ensure this hasn't happened in other firms? How do you make sure that you and your demat account are safe from this kind of a situation, and why did it take place in the first place? To speak on all this and more, I'm joined today by Deepak Shenoy, founder of Capital Mind, and Nikhil Kamath, co-founder and head of trading at Zerodha, another, of course, prominent stockbroking firm. Welcome to both of you. Deepak, let me begin by just getting your take on what we've seen so far, and of course the legal process in SAT, etc. will continue. But just the shocker that something like this was happening. Or was it SEBI's new rules in June which led to the uncovering of the situation?
It was, Tamana. In fact, see, the problem is SEBI was aware of this for a long time, that brokers would, a lot of the older age brokers would give margin funding to their customers, right? So they would take the stocks that they own and put it into a pool account. Sometimes when they bought shares, they would keep it in the pool account, not transfer it to a demat account. They would then take loans against the pool account as a whole on their own book at 12% interest and give margin funding to their customers at 18%. Now, in this process, SEBI has said this is actually a very dangerous practice because some customers who don't even know that their stocks are in pool accounts and not in their own demat accounts will not be aware that this practice is happening and their own stocks are being used by the broker to borrow money. And in this particular case, what seems to have happened is that Karvy Broking has taken a loan and given the money to a subsidiary, which is Karvy Realty, which is effectively backed by the collateral of customer securities. So this, has been a huge problem for customers who've now suddenly found out. But more importantly, when NSE and SEBI introduced rules earlier this year, they said such practices should not be allowed. So, it's a shock for a lot of customers, but a step in the right direction, perhaps, for the regulation as a whole.
No, but it's a breach of trust. I think more than shock for customers, it's a all-out breach of trust. And, we're not just talking about investors in demat accounts. I mean, think of the average Indian investor saver. PMC happens, then Karvy happens. You don't know where you are safe. Nikhil Kamath, you want to come in on this? I mean, I've seen some of the communication that Zerodha has put out saying that effectively, look, we are not like this. And I know in that sense it's a bit of a marketing opportunity, but I'd urge you to look at the bigger picture. It does cast a big question mark on all broking firms about what's really going on.
I agree. I mean, we've never done loan against share up until now, and we're not in this market per se. But I think the direction that SEBI and NSE is moving in is quite good. They're cleaning up the system, and these large issues that are coming to the fray now are coming because of the new policies that SEBI is bringing into place. Now, these might cause short-term upsets in the market, but long-term, I think it'll go a long way in making the markets more efficient per se.
Okay, that's true. But tell us, why do you think a situation like this could have emerged, and why should any investor or client of a DP trust any of its parent DPs right now? Why would they not maybe move their business to a bank and think it's safer?
Well, I think we need more checks in place. I think not at a broker level, but maybe we need another form of reporting from, say, NSDL or something, which is a direct communication with the client, which lets them know what is actually held in their DP accounts. Also, I think we need to make sure the broker who you're trusting, you need to research how well he's doing, how big his balance sheet is, what the company's net worth is, and really make sure you're making the right decision when you're picking a broker. I think picking a broker is a very important decision, and there has to be some research which goes into making this decision.
Deepak, do you agree with that? That you now do research for picking a broker and hope that they're not misusing your power of attorney. Can you just explain to us, about how this power of attorney is being misused? And there really is no option for it, right? You have to give your broker power of attorney.
We don't have to because the earlier brokers used to operate without a power of attorney. The idea would be that you would give them a depository instruction slip, a signed slip with which allows them to take their securities out from your demat account and deliver it to the exchange to the clearing system. But because online brokers and most of the newer brokers, you can't operate really because I can't wait for an instruction slip to come before and if you sold your shares and you don't give me an instruction slip, the broker is liable. So even a broker like Zerodha will actually tell you that if you don't want to use if you want to use a different demat account, please before you sell shares, transfer the shares yourself using an offline slip into the Zerodha pool. Only then will we allow you to sell shares. Which if you don't use a demat account or something like that. In fact, this is a practice that used to be followed earlier. The misuse in this case is actually of two causes. One is when people buy shares, they don't, some broker, Karvy in this case, may not have transferred shares into the pool, into the demat account of customers at all. That means they kept it in the pool account, never transferred it to demat, and didn't use the power of attorney in the first place. Second is the misuse of a power of attorney when shares were taken out of demat accounts and then put into a separate account which was used for leverage or for borrowing money. That was a misuse of the power of attorney. But the second part is possibly less likely now because whenever your demat account is debited, you get an SMS from NSDL or CDSL, the two depositories in the country, and you can therefore take action. The pool, if the stock doesn't even come into your demat account, you will never even know that it's being misused. So the practice has been attempted to be stopped in 2016 by SEBI, which said within one day you have to transfer shares into customers' demat account. But what brokers have done is a loophole. They have said the customer hasn't paid me. So it's an unpaid security. It sits in my pool until he fully pays me. Nobody has ever audited that in any meaningful way until now. And when they've done it now, and SEBI set up a specific rule saying, listen, if you call it unpaid, it has to go into an unpaid securities demat account separate from your pool account, which cannot be used as leverage. That again brought down Karvy because perhaps one of the loopholes they were using was this. So, multiple things have happened. I don't think it's just a misuse of power of attorney. It's just, a lot of old practices that were considered kosher that obviously in today's world are not. And it's coming and hitting the system in the face right now. Good for the future, horrible for current customers, but hopefully we'll see a resolution soon.
So, what is the advice for customers then? No matter which company they're with. And Nikki, let me get you to come in here. For example, how are you ensuring that customers feel safe?
I think it's up to the broker and the onus is on him to be extremely transparent. I think you have to have everything out there for the customer to check whenever he needs to check his account, or which he should periodically do. And our efforts are just in the direction of being more and more transparent. So we have everything out there, and the customer can log in and check whenever he wants. And the great thing today is all the data is available online, so you don't have to really call anybody, but you can just log on to your mobile or your app or your web-based platform and just check it in a couple of minutes.
The other important aspect of this, Deepak, which we must talk about and look at what's happening in SAT also today, is the lenders in the picture. The lenders now are moving to, freeze those pledged securities that have been transferred back. NSDL ended up transferring securities back for about 90% of the customers, but now they can't for the rest. What about the role of lenders in all of this? Because like you said, that these were old practices which were kosher up till now. SEBI has sort of, stepped in. Do you see a larger impact on the financial system?
Well, I think yes, they should be in some way if there's a repercussion of this lending. They were aware of this. Both lenders and brokers have been aware of this since June. I think there was a feeling that perhaps of the lenders in this case perhaps were thinking that perhaps SEBI will extend the date from October 1st onwards, and it didn't happen. Now, what has happened is I've given, as a lender, if I have given a loan against a pool account, I will typically say, listen, whatever securities are in the pool account are effectively collateralized to me. If as a lender I am monitoring this pool account, I will be seeing securities go in and go out. This is typical of a pool kind of an account operational philosophy, and it would be absolutely within my rights to say or demand whose are these securities, because obviously they're not moving in and moving out as if they're owned by the broker. They're actually owned by clients, and the pool account is therefore put in. Once the new rules came in from October 1st, these lenders should have said, listen, we cannot lend against pool accounts. We have to have lend only against accounts where the customer has given the stocks to you specifically to be margined. That is got to be a separate denominated client margin account, which according to SEBI rules comes into operation from October 1st. If a broker hasn't done this and the lender is aware of the rules as well, then I don't think the system can say that the lender is blameless. They should be aware, and if there is going to be a hit now to their financials because of this,
Yeah.
that's going to just have to happen. You can't ignore regulation like this.
Nikhil, do you see a larger impact on the industry?
I don't think so. I think I like the approach that SEBI and the regulators are taking right now, and they're keeping the client's interest first. And we hope that the clients are done right by, and most of them get back whatever has been pledged by Karvy. But I think this will be a short-term instance. I don't think it's going to have a long-term impact. If anything, it'll make the markets a lot more cleaner and more compliant, which I think is par for the course when you look at it in a long-term manner.
Last word from you, Deepak. Advice to those who are watching, of course, many of them investors, and how they should ensure that their accounts are not being misused.
So firstly, as a disclosure, I'm a Zerodha customer, so little bit biased here, and thanks Nikhil for coming in here. But here's what I think you should do. As a broker, as a customer of any broker, you can go to CDSL, you can go to NSDL, register online. We've given details at a post on Capital Mind. You can register online and see every day what are your current holdings in your NSDL or CDSL. Remember, no broker holds your securities. They are held at NSDL or CDSL. Give your demat account details, you will be able to actually see what securities are in here. Anything you purchased more than 2 days ago should reflect, or 3 days ago in many cases, should reflect in your demat account as of today. So if they don't, you know that there is a disconnect and there is a there's a reason why, and you can talk to your broker about this. You should do this once in a month, once in a quarter. It's not a big deal to go and verify this, and ensure that you're aware that transfers are happening by looking at the SMSs that NSDL or CDSL will send you. Second part, if you're in Karvy and you're impacted and your CDSL or NSDL account, whichever may be, is actually holding those securities, Karvy cannot touch them because the POA is no longer valid. But securities can be transferred from your demat account at Karvy to any other demat account that you own outside of the system. Find a broker that you trust, and I don't think bank brokers are necessarily more trustworthy. We've seen a lot more cases against such brokers than standalone brokers. So I think you should find a broker that you can trust, move your securities to that broker, and then continue to operate. Don't attempt to sell them on the Karvy platform. Don't attempt to do anything else, but focus on that. And if there is a discrepancy between what you think you hold and what's in your demat account, please contact Karvy, contact SEBI, contact NSE, because redressal process is in place, and I'm sure this will get resolved, but you need to make sure that your voice is heard.
Absolutely. You also need to ensure that you're safe. As investors in the stock markets, as depositors in banks, it's not really a good time for those who want to save money. Let's not talk about those who are trying to make money. But I want to thank you, both Deepak Shenoy, of course, and Nikhil Kamath for coming in. And disclosure, we're not batting for or against any particular firm. We're just trying to give you a picture of what really is going on.